Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. Before we dig in and take a look at Bitcoin's daily analysis, remember this is for edutainment only and not to be considered as financial advice. Additionally, I would appreciate it if you could help spread my simple to understand analysis out into the rest of the cryptoverse. You can do that by smashing the like, ringing my bell, and hitting subscribe if you haven't, and sharing your thoughts and questions in the comment section. That will help the YouTube algorithm promote my videos to help others, especially newbies or people who don't do their own analysis, make more informed decisions to prevent them from losing money and making money. So let's dive into the news first, and then we'll take a look at the analysis. Here we go. And this article, let me scroll all the way up here. This article is from Cointelegraph. It's titled, Bitcoin clings to 36K as data suggests BTC price sell-off came from short-term holders. I'm going to skip a bunch of stuff from this article and go down to the meat and potato of this article. And here they quoted journalist Colin Wu, who basically said, according to CryptoQuant data, the decline in the last 2 days may be dominated by short-term holders. On the 5th and 6th, a total of 11.76 quote-unquote young BTC held in for less than 3 months flowed into the exchange. Just because they flowed into the exchange doesn't mean that they sold. So it's a possibility. And they show this really confusing chart here for spent output H bands. So you can see the graphs here. You get different colors and anyways. So it's a possibility that short-term holders sold because back in January, February, that's where Bitcoin dropped down to roughly around the 32K area, and they might have sold. However, so that's a possibility. I'm not saying there's not. At the same time, though, Glassnode recently shared that long-term holders sold. So I think it's a combination of long-term holders, short-term holders, and also miners. They got to sell to pay for expenses. This article also touched on, and I'll scroll all the way up here. Luna Foundation Guard recently bought some more. They bought $1.5 billion of BTC, but they did it over the counter. So that's not in spot market because that would have driven the price up. So I'm glad they're doing it over the counter to make the market less volatile. With that, let's dive into something I want to share with you on Glassnode. I looked at various different Bitcoin addresses with balance of, let me see here, show you. I don't want to move because it'll change this. With different balances like greater than, equal or greater than 100K Bitcoin, greater than like 0.001, etc., etc. I looked at all of them. And there was only one where it had a decrease in the number of addresses and balances. So this is it. The number of addresses with balance greater than or equal to 1,000 Bitcoin actually decrease, while the other ones increase. So this means that this people with 1,000 or more Bitcoin sold, possibly, strong possibility they sold, and that might have contributed to the decline as well. Let's dive into the analysis. Here's the current, or when I prepared this chart. At press time, let's say that. It sounds so professional. At press time, the crypto market is mostly blood red. We have some greens here, but what we're focusing on is Bitcoin. Bitcoin was sitting at 35.9K, dominance 41.49. Market cap was at $1.65 trillion, down 0.61% or 61 basis point. And then Bitcoin, you can see here the 24, 7, 30, 60, and 90 days all down, all in the red. Bitcoin's market cap is sitting at $683.6 billion. And here's the current daily chart from TradingView. What do we see here? Let's start with my analysis yesterday. Yesterday, I mentioned that Bitcoin is likely to chop between 37.5 and 35K, and that it would probably hang around the lower end of that range. It did do that. Here's the lower end. It hung around the lower end. However, I also mentioned that it might have taller wicks on top and on the bottom. That was not, it didn't do that. It actually had very little wicks on top and on the bottom. The current candle is actually, it grew since I started this analysis and prepared for this analysis. So it didn't have the longer wicks as I was expecting, but it did compress the body. It was much smaller than this. So it because when you can have either long wicks or you can have it compress. It did the compression instead. Bitcoin's current, let's see here. It printed the third consecutive descending bearish daily candle, and it had at press time, it had a high of 36.2K and a low of 35.8K. Right now, it's sitting at 35.4K. So it looks like it dropped a little bit. And I'll share more about that in a second. You can do a quick glance here. I mentioned that there's a bearish tendency, and it is doing that even before it dropped further. Anyways, BTC is riding the bottom of the Bollinger Band. You can see that here. And the bottom was at 35.8K, and it remains below the descending channel support. This previous really strong support, it remains below that. And that current level right there is at 36.7. Yep. So 36.7, it remains below that. And that's bearish. Additionally, Bitcoin has been below the Bollinger basis, which is the middle line here, the blue line of the Bollinger. And it's been below that. That basis line is currently at 39.2K. It's been below that for 32 consecutive days, counting the 2 days that it, popped above and came back down. It remains in the bearish territory below the 50-day moving average. This pinkish reddish line here, that's at 41.6K up here. And then it's also below the bull market support band. Oh, sorry, that's the bull market support band. This grayish band here, and that range right there is 41.8 to 42.8K. So still in the bearish territory. The nearest support level is 35K. This green dash line down here, and also this descending lower lows here. This daily candle is not finished yet, so we don't know how it's going to pan out. But I drew it in here to see if it'll print a lower low. At press time, it didn't print a lower low yet, but it may do that soon here. It looks like it may do that. The nearest resistance is at this area of confluence, where the bottom of the Bollinger, let's see here. So the bottom of the Bollinger Band here, and also the descending channel resistance and support. So that would be right here. That would be where the resistance will be. It'll be this descending channel support mainly. The previously traded volume for this price zone, if you look here, it's about, well, now it's way down here, but earlier it was up here. It was about a third of the max. So about, a third of the max high. Max is up here. It's currently, it was right in this area. It was about a third. And the daily volume was 35% of the moving average. You can see that's below the moving average, this grayish line here. Down below, let's take a look at the KDJ. The white J line of the KDJ continues to trend down below the blue K and the red D lines. It was printing at 12. It's now at 6. So the white MACD line was at negative 1,298, continues to trend down below the red signal line, and it's printing its 32nd of 33 bearish growing histogram bars. Notice, you notice how they got thinner, and then it started growing again. So it's growing more bearish. The red RSI and blue CVD continues to trend down below, and but it was flatter. Now it's more sharper. The red RSI line is at 36. It's currently at 35. I gave it a bear and a crab because it was more sideways than it is now. The blue CVD line is was at 1.805 million. I gave that a bear and a crab. The white CVD line flipped back down to was at negative 3,476 with a bear. And so basically my summary for this is it's going to be a crab and a bear. It's going to crab in this zone right here, but with bearish tendency. So it may put in a lower low. It looks like it will pretty soon here put in a lower low, and that's concerning. And that's what this lower low line is going to track. My summary, intraday BTC is like these slide along the Bollinger Band bottom, and that Bollinger Band bottom is this blue line here, and that's descending. So, and also to keep an eye on the potential short liquidation build up, and I'll share with you that chart in a few minutes here. Here's the options max pain, and if you don't know what that is, feel free to check out the links in the description. For the 8th, 36K. For the 9th, 36K. For the 13th, 38K. For the 20th of May, 38K. So looking at between 36 and 38K. And these prices may change because it's a dynamic market. Let's take a volume for the options. Volumes are contracts that have been filled already. You can see here on the 13th, a lot of contracts for that expiration date have been filled already. There were more calls. Calls are options to buy, but not the obligation to. And puts are options to sell, but not the obligation. Here, we on the open contract, open interest, there are contracts that are pending and not filled yet. You can see here on the 8th, 9th, 13th, and 20th, not a lot of open interest available. So for those dates, the max pain may not be as effective in where the price may be drawn toward. Here's the zoomed in view of the heat map when I did a screen grab here. You can see there's a lot of these right here are computer bots, if you will, algorithms that are trying to spoof walls, if you will. You got spoof walls on top, spoof walls on the bottom, and they're tiny little movements, and they go with the price. You can see that they're both on sell walls and buy walls, spoof ones. But you can see the right here, this one looks like it's a solid wall, but it's not. This is upcoming prices. These are the actual what happened. But this one right here, the 35K one, is a real wall. Price wick down, it stayed still. Look how these things move, jump around. And you can't jump around that fast unless you're a computer bot monitoring the price all the time. And you can see here down here, cumulative volume delta, we have more aggressive more market buys. That's what these greens are, measuring the CVD here. and it's not that aggressive. It's about a third aggressive buys, market buys. Here's a zoomed out view, so we can see the sell walls on top, buy walls on the bottom. 50K sell wall is still there, and it's, you know, it's not huge because it's not that bright. We got buy walls below. We got the 35K wall that's been there for a long time. And then we had this band here between 33 and 32 that kind of disappeared, but it's got a thinner yellowish wall here that's still there around 33K. The 30K buy wall is still there, and a light 25K and 20K is still there. CVD is the same as the last one. Here's the liquidations levels for on Binance, for Binance alone, and this one's from High Block Capital, and this one shows more excess high leverage for short positions. So this is only for high leverage 20 to 100x. Don't do those kind of levels, but this just tells you what's going on. Here are the high leverage short positions. Here are the high leverage long positions. Take the money from the short positions up here, subtract it from the money in the long positions, and you get the difference called the delta. And currently delta is negative $8.7 billion. And so negative just means that there are more excess shorts. So there are more high leverage money in shorts than there are in longs, is all it's saying. At around 8.7, like I mentioned yesterday, that's building up. When it hits around 10, 11, 12, you might see a short liquidation as it builds up. And a short liquidation can happen when one way is someone with a lot of money and Bitcoin, they can take the they can put in a long position, a high leverage long position on the what is this perpetual futures market, like let's say 100x, right? And what they do is they go to the spot. Once they have the position covered in this perpetual futures, high leverage, they go to the spot market with all their millions. They start buying Bitcoin. When they buy Bitcoin, it drives the price up on the spot market. Since the perpetual futures market is linked to the spot market, as the price of the spot market go up, the perpetual futures market go up. And guess what? Since they're long, they're going to make a ton of money, right? And all those short position will get liquidated. So for every short, there is a long. So that's how it works. So keep an eye on that. That's not an if. That's a when. And it may not happen right away, but it will happen in the future, near future. And that's it for the Bitcoin daily analysis. I appreciate your time. Please help spread my simple to understand analysis to help others, because obviously you're here because it's helping you. And do the same for others. Pay it forward. It's free. You don't have to do much except click the like, ring my bell for notifications, and subscribe if you haven't, and share your thoughts and comments and questions in the comment section. Appreciate it. I have a couple more videos to do today, so I look forward to seeing you then. Peace.